Hi there, welcome to Kneppy Invest. We are into February. This is my second favorite month of the year after August because we are starting to get half yearly reports. Some companies will actually release their 4 year reports in February, but Nick Scali traditionally is one of the first companies to release either the half yearly or yearly report in August. And interesting reaction from the market today upon the release of Nick Scali's half yearly results. Share price down 13%. Now, the majority of that fall was in the first few minutes of trading. Now, the share price opened down about something like 0.2%. So it was just after opening when the share price was hit hard. So, in my opinion, there was something subtle within the results the market did not like, and the share price kept on falling throughout most of the day. However, the share price did level off during the last hour or 2 hours of trading. So in this video, we're going to look at Nick Scali's half-year results, trying to understand why the market has punished this company, and possibly this could be a good time to buy into Nick Scali if you do think the market has overreacted. Now, based off the results, you might think the market would absolutely reward Nick Scali because revenue up 57.4% from the previous corresponding period, profit after tax up 70.2% from 35.6 million to 60.6 million, gross margins down a little bit from 63.2% to 62%, earnings per share up 70% in line with profit after tax from 44 cents to 74.8 cents. And even the dividend had increased from 35 cents to 40 cents. So obviously there is something else that spooked the market. Even if we go back to the AGM back in November, there was a little bit of guidance there from Anthony Scali, the founder and CEO. Now, in that AGM, he mentioned the gross margins at that point in time were 61.3%. So gross margins actually increased or improved during the last few months. He also gave a forecast for profit after tax based off the business they were seeing during the first 4 months of the financial year. And he expected profit to be between 56 and 59 million. And the profit they actually did record was 60.6 million, which was a beat of the profit after tax he mentioned at the AGM. So because the profit was better than expected from the AGM, you might think the market would reward Nick Scali with the share price increasing. But the exact opposite happened. The share price fell 13%. So there's something else within the results that spooked the market. The thing to look at when you are reading a half-year results is to see whether results beat expectations or any guidance a company has received. And when I say expectations, I'm talking about market expectations. So you will see some analysis have their expectations of the results. And if those expectations were lower than what the company gave the market, you will see the share price rebound or vice versa. The other thing to look at, and this is very important, is the outlook, any guidance a company will give to the market. So this is the most likely reason why the share price was down or is down 13% on this day, why the market has punished Nick Scali. Now, however, in the outlook section, there was a lot of positiveness here. So in the first little section here, it's mentioned January was the strongest trading month and was better than the group's expectations. They also said here that the group had anticipated a slowdown compared to COVID-19 boom, yet trading remains better than pre-COVID-19. So straight away in the outlook session, it actually sounds pretty good. But right at the bottom here in the outlook section, they mention, or whoever decided to write this mentions, that the second half financial year 23 results depend on trading during February to April. And at this point, it is difficult to provide further guidance. So potentially the reason why the market has punished Nick Scali is a lack of any guidance from the company. One of the things I like to do when a company releases some interesting news to the market, so their financial results or maybe a profit upgrade, profit downgrade, is just to look at the reaction or the initial reaction from the market, because sometimes you'll see a share price down 30% on open or up 30% on open. But what happened with Nick Scali was unusual. In fact, I haven't seen this happen all that often, because in the first minute of trading, the share price of Nick Scali was actually up slightly. It wasn't until the second and third minute of trading where we started to see immense selling. The share price actually decreased from $12 and about 50 cents down to $11.20 in 2 minutes of trading. It wasn't the first and second minute, it was the second and third minute of trading. Then we saw a bounce, which is something typical you see after immense selling or even immense buying. You see a little bit of a correction the other way. And then during the rest of the day, the share price of Nick Scali just drifted downward until the last hour, where we saw the share price just go sideways, consolidate. So really interesting trading in Nick Scali. I do have an hypothesis that someone went through or took their time to go through the results and didn't react to the results until that second minute of trading, because I have not seen this sort of reaction from the market happen all that often in the last 10 to 12 years. And we can see that really interesting trading for Nick Scali on the 6th of February when we look at the one-day candlestick. So this is the daily chart for Nick Scali going back to October 2021. It's not often you see that sort of candlestick we have seen for Nick Scali on the 6th of February. Share price actually did open up slightly for the day and then was driven down by the market. So you don't see these really long red candlesticks all that often. There was a little bit of a tail to the bottom. That is telling us that there was a little bit of buying coming in during the day, and that happened in the last hour of trading. So that buying came in when the share price reached the 150-day moving average at around about $10.50. So when you do look at this particular chart, it was starting to look bullish because the share price moved through a resistance level at $11.50 and then continued to climb before the release of these results. And now the share price has been driven below that resistance level, which came support, and pretty high volume as well today. So a lot of volume is telling us there was a lot of participants in the market. So a lot of sellers, a lot of buyers, and the sellers were in control of trading today. So the sellers didn't like what they saw from the half-year results, and they were forcing the share price down because they wanted to sell out of Nick Scali no matter what, and they didn't care if they were selling at a few cents below where the share price was trading at that point in time. And that is what forces the share price down when those bears are in control of the market. That's all I have for this quick look at Nick Scali's half-yearly results for financial year 23. Share price down 13%, and really interesting trading for the day, particularly in those first few minutes. If you have any thoughts about Nick Scali and their results, I'd love to hear your opinion, so leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.